Hello! Welcome to episode 20
of Mo Money,
the investing show for millennials by a millennial, where our goal is to educate, entertain, and empower a new generation of investors. I am, of course, the host you love the most, MC Mo. I'm on vacation this week, that's why I'm rocking this. Got the headband going, the beautiful hair flowing, drinking a delicious summer shandy. We are reporting to you this week from my mother's basement in my wonderful hometown, the wonderful city of Worcester, not Wooster, Ohio. Ranked top 10 small cities by NerdWallet, birthplace of physics Nobel Prize winner Carl Taylor Compton, headquarters of wonderful corporations like Worcester Brush and Certified Angus Beef, and boasts other wonderful commercial operations like those of Frito-Lay and Luke. It is also the home to the prestigious College of Worcester, referred to as the Harvard of the Midwest. We also have great historical importance of building the Oscar Mayer Wienermobile. We had the first Christmas tree in the USA, and Miss Ohio 2015. This place is one hell of an amazing city. Now that you know where I come from, let's get back to the show
with a Mo Money market update.
Like I said, I'm on vacation, and I've been partying and bullshitting for my birthday this week, so I have no fucking idea what's going on in the market. I haven't been looking at Twitter, don't know what the hell's going on. Heard something about reaching all-time highs, which that's pretty cool, but besides that, I got nothing. This week, we're going to talk about something fun and something I know the majority of you are all familiar with, and that is how fucking amazing Leonardo DiCaprio is an actor. I mean, oh my god, everything he does is amazing. Titanic?
Classic.
Inception?
Classic.
Departed?
Classic.
Catch Me If You Can?
Classic.
Great Gatsby? Phenomenal. But today we're going to talk about one in particular, The Wolf of Wall Street. We're not going to talk about Leonardo. I wish we could talk about that, but this week we're going to discuss the glossed over facts of the movie. Now, if you watch the movie, you may think he did nothing but have sex with hookers, do drugs, and steal people's money, which is pretty accurate. But what they do not mention in the film is the finer points of what exactly allowed him to rake in millions and millions of dollars. You know, tries to explain it in the movie, but figure the crowd didn't want to hear it. They only wanted more partying scenes and more hot chicks. And, well, that wasn't a wrong thought, but it doesn't mean that you won't be interested. So here we go. Now, you pretty much know the whole backstory. Movie's based on Jordan Belfort. Belfort was from Bayside, Queens. He quit dental school after 2 days after he realized he couldn't get super rich doing that profession anymore. He ran a fish company that went bankrupt. He became a broker at the prestigious L.F. Rothschild's brokerage firm in the city, which went under in the crash of 1987. Took up work at a small bucket shop investment firm on Long Island called Investor Center. And this is where he discovered the world of penny stocks. Now, penny stocks are stocks that trade for $5 or under. They have really small market caps, anywhere between 50 to 300 million, and their prices are highly volatile due to the fact that there is low liquidity, due to the fact that very few people buy them. Okay, they are not trading on major exchanges like the New York Stock Exchange or NASDAQ, okay, which means they trade in the over-the-counter market, the OTC, which means there's less coverage, less information, and less regulation on these stocks. The perk of these stocks for brokers like Belfort is that commissions can be as high as 50%. So if somebody decides to buy $100,000 worth of a penny stock that is trading for $1, then the broker, he makes $50,000 on that trade. The remaining $50,000 is invested in the stock. Traditional stocks like Apple, IBM, Facebook, brokers can trade at max 5%. And usually clients won't allow anything over 2% unless you've proven yourself to be very worthy. So Belfort, who was broke as shit, getting evicted from his apartment, and desperate for a way to make money, had found a gold mine. Like DiCaprio says in the movie, he was selling trash to trash. That's who bought these stocks. Uneducated investors hoping to strike gold with minimal investment, and he knew how to sell. He was trained by the big dogs on Wall Street. These guys were the masters of the universe. They know how to sell to anybody. So to sell to these guys was like selling crack to crackheads. Guys were investing $2,000, $5,000, $7,500 into penny stocks with no idea what they were really buying, and Belfort was making a good amount of money doing so, but he had bigger dreams and richer dreams. So he left Investor Center, teamed up with some friends, and started his own firm selling penny stocks. This went on for a short while. He was making decent money, but he knew he could do better, and he knew he could make more. But how? By selling to clients who had more money. Instead of calling the small fish in the investment world, people with more money are called whales. Okay, these guys with net worths 5 million up and liquid for at least 100,000. The problem is these guys know better than to buy shit stocks, but Belfort had a plan to convince them otherwise. First, he changed the name of the firm to a more prestigious, waspy-sounding name, Stratton Oakmont. Then he taught his brokers what is called the Eastman Kodak pitch. Eastman Kodak at the time was a large blue chip stock. Blue chips are the high price, high market cap stocks like the ones I mentioned before, Apple, IBM, and Facebook. These are considered relatively safe, relatively good investments. So they would cold call potential investors and pitch a stock they're more familiar with, like Kodak. So they'd use this as a stepping stone and build a solid trusting relationship relationship with their clients, the investors. Once the investors made a little money with the stock and built some trust, it was time for the brokers to make their money. Now, what Belfort did was highly legal, but he was highly talented. He knew how to train his brokers to basically convince investors to hand over their money, and he would give highly motivational speeches before the day, get his brokers going and making money. These guys followed a buy or die technique. They would degrade their clients to buy stocks till they either bought the stock or died. So once the relationship of trust was established, a few days later they would call up clients and pitch whatever shit penny stock they were pushing that day. Now, up to this point, nothing really illegal had happened. Okay, a little unethical, sure, but nothing illegal. But of course, as usual, Belfort got greedier and decided moving into the more lucrative world of investment banking. Now, this is where shit started to get illegal. Now, investment banks are the ones who help companies who are looking to go public. The large investment banks are JP Morgan, Goldman Sachs, Bank of America, Morgan Stanley, banks like that. These banks help companies structure their IPOs, their initial public offering. They decide the prices, how many shares, and all that financial stuff. IPOs are the first time a shares of a formerly private company are available to the general public. So let's say you owned a pizza. Not a pizza place, you just owned a pizza. And it was your own private pizza, and you love this pizza, but you wanted more pizza. So you would make pieces of your pizza available to the public. So you go to the investment pizza guy, he tells you how much to sell your slices for, so he takes your slices, he sells them to people, and brings you the money back, and you use that money to buy more pizza. It's amazing. Belfort realized the real money was investment banking and IPOs. So Stratton Oakmont started taking companies public. The problem, no real company wants to be taken public by some shit firm. They won't be able to raise any money. So Belfort was taking shit companies public that had no business going public. Karate shops, pizza places, some shitty tech firms, shit like that. So let's break down how he did it. First, he'd start off with some shit company and do all the finance stuff. They'd set a price and how many shares were to be sold. Industry standards says the underwriter, aka the investment bank, who's taking you public, cannot hold more than 5% of the shares when it goes public, which would be a big problem in Belfort's scam, but he had a way around it. He would give shares to his friends, aka his rat holes, to hold. Once the day came for these IPOs to start trading, he would buy back those shares in the open market, and his rat holes would make a nice and risk-free return. It would happen like this. Say the shares were trading at $4 a share. The rat holes would buy $100,000 before they were available to the public for a total of $400,000. Once the stock started trading, he would buy it back from them at an agreed price. So let's say $4.25. That's a $25,000 profit for them. Risk-free. And just like that, Belfort is back in control of the majority of the shares. Once he gained total control of the majority of the shares at Stratton, he would be able to manipulate the price however he wanted. Belfort would have his brokers sell their fucking heads off, pitching these IPOs to their clients. The vast increase in demand would cause the stocks to go shooting through the roof. So from $4 to $4.50 to $6 to $8 to $12. That's a 200% gain. Now, once the stock reached the desired price, Belfort would artificially keep the price high for about a month to keep from alerting the SEC. If they questioned the sharp drop, he would just blame it on poor market conditions. Now, once it reached the desired profit, he would sell the majority of the shares that he was holding and pocket the profits for the firm. They did this 34 times. Now, this is commonly referred to as a pump and dump scheme. A majority owner of a stock pumps up the price using brokers to inflate demand, and once they have reached a desired profit, they dump their shares in the open market, make a lot of money, and leave unknowing, helpless investors with worthless shares. This is highly illegal, even back then, but it was a very effective scam. So how did they keep finding investors? Well, first, brokers would let their clients win on a couple IPOs. So if this was your first IPO, they'd put you in for a relatively small amount, so let's say $75,000, and sell you out somewhere along the way so you'd make a nice profit. Then they'd let you win again. Then the third time, they'd ask you for the big money, $250,000, $500,000, and that is when they would fuck you. Clients who tried to sell their stocks would either be hung up on, convinced to hold the stocks, or have their calls ignored altogether. Now, once those clients got pissed and leave because they lost all their money, the brokers would just cold call and find new cows to bring to slaughter. This is how Stratton Oakmont operated, and how Jordan Belfort turned himself into the model-marrying, hooker-fucking, drug-snorting, money-blowing, helicopter-crashing, yacht-sinking, money-laundering, Wolf of Wall Street criminal. He would have gotten away with all of it had the Swiss banker he's using to launder his money in Switzerland not been arrested in U.S. territory and dropped the dime on him. But karma's a bitch. So what's the lesson here? Penny stocks are dangerous. They can easily be manipulated because they're not heavily regulated. And even though pump and dumps are illegal, people still find new variations to this old scheme. I would suggest avoiding penny stocks at all costs. There are hundreds of better investments, but people will always fall for the tempting offer of turning $250 into $25,000. Second lesson, don't listen to anyone with a hot tip unless you do your research first. If they had the internet back then, Belfort's scam would have been almost impossible, if not much, much more difficult. Most people who are giving you a hot tip usually have some ulterior motive, so be very wary of them. Bottom line, Wolf of Wall Street's a great movie, an amazing set of books. Belfort has since said to have turned his life around. He's now a motivational speaker for entrepreneurs and is working to pay back his debts to society, even if he's doing it really slowly. With that said, crime does not pay. You will eventually get caught. There is no way to get rich quick in the market. It takes time, patience, and and education. Final word is, how great is Leonardo DiCaprio? I mean, he's amazing, right? So with that said, I'm trying to make sure that he becomes the next James Bond. Enough British actors have been stealing good American roles. And I'm talking you, Tom Hiddleston. You do not deserve to play F. Scott Fitzgerald and Hank Williams, you wanker. So I'd like everybody to tweet the hashtag Leo for Bond and make sure that the wonderful Leonardo DiCaprio is the next James Bond. I appreciate you all watching another episode. We'll be here every Friday with a new episode of Mo Money. For now, don't forget to like, comment, subscribe, and share. Follow me on Twitter. Like me on Facebook. I have an Instagram now, The Mo Money Show. For now, Mo Money, signing out.